right, ladies and gentlemen, welcome back to the Finance Channel. Welcome back to Money Minds. And today we're going to talk about an interesting topic, dividend investing over real estate investing. And, or I should say dividend investing over investing in real estate, right? I hear a lot of people talk about how they want to own homes, how they would like to own a condominium, how they would like to own a small building, or just even maybe one or two or three units, right? Something that they can lease out to tenants over the course of the years to provide that residual income or to provide that passive income that everyone so longs for in their life to help mitigate some of the cost of living, right? Well, the thing about that is that investing in real estate can be both timely and costly, okay? And for a lot of us, I think for the average American, we do not have that income to invest up front. Most of us would have to go and secure a loan from the bank in order to buy a property and invest in it and fix it up and get it up to code where it would need to be in order for us to sell it or to rent it out. So I think today we're going to go over the pros and cons of both. I'm not going to read the entire article because the article that I found is a pretty big article. But I do want to share some of the pros and cons. And for those of you wondering if dividend investing is for you, then I urge you to continue to watch this video. I am a dividend investor. This is my channel. This is what I love to focus on. I love to talk about finance as a whole. And a lot of times we're going to go over topics that are going to encompass various different things and topics that are going on out there in the world. But right now, I want to focus on the dividends and tell you why it is that I think that dividend investing is one of the easiest ways to build wealth for the long term. All right. Right now, I got pulled up right here through the public app, my dividend portfolio, which is currently at $8,343.69 as of market close today. And you can see I got a little buying power there. I'll probably invest more tomorrow. But I just want to give you all an update to show you that, listen, I do this for real, okay? I am not a multimillionaire. I am not a person that's getting thousands of dollars here on YouTube to where I can go invest it and I'm selling courses to y'all and that, that's how I can invest all this money. No, I have a day job. I have a regular day job just like y'all, or a night job in my case, and I go to work. That is where the majority of my income comes from, all right? Now, I do a couple of other things here on YouTube. I have 2 other channels that I like to spend time on, but those channels are not paying me what these mega YouTube stars are getting paid. I said all that to say that if I can do it, if I can build an $8,000 portfolio, a 4-figure portfolio, headed to a 5-figure portfolio, then I know that you all can do it as well, all right? So this is not to brag. This is just me showing y'all, being open and honest about what I'm doing so I can show you that it is, in fact, possible. I started this portfolio with about $50, I think, and it has ballooned into something that, if need be, if I had an emergency, I can go cash. I can go sell all of these stocks and get that money. That is one of the pros, okay, to having a dividend portfolio. But listen, I'm going to go scroll down the list really quickly. So you see at the top there, we've got Realty Income. I've got about 58.69 shares of that right now. Next on the list, that is Realty Income is by far my biggest position in this portfolio. Obviously, followed by SCHD with almost 10 shares of that, followed by Stag. And tomorrow, these numbers will all look different because I'm going to be investing into all of these tomorrow. But I just want to give you all a quick rundown of what's all in here. You can see I started positions in VYM, DGRO, and VIG as well. And I'm going to continue to build on those as time progresses. Now, I told y'all about AGNC, that it is a dividend trap, that I do believe that is something that you should, and if you're going to invest, in AGNC, that you should do it with caution. But you can see here that I did pick up about $100 worth of this, and I'm down 72 cents right now. But I have over 10 shares. All right, so you can see AGNC, which is something that I warned you all about before. I did pick up, I did pour $100 into there, and it got me about 10 shares, a little over 10 shares. So AGNC and PSEC are by far the riskiest assets that I have inside of this portfolio right now. PSEC I have about 40 shares of that, and I am down 20 bucks currently. But however, keep in mind that number does not reflect the dividends that I'm receiving from these stocks. So I just wanted to give you a quick insider before we get started on this article, and to show you all that, listen, if I built this little portfolio here that is approaching $10,000, starting it out with minimum funds, I know that you all can do it too. It's not about how much money you got, it's about how much you save. So, dividend stocks versus real estate in 2024. It says investing is all about earning the highest return possible while minimizing risk. Of course, there are many routes investors can take to reach this destination. Two of the most common ways people invest are the stock market and in real estate. The subject of dividend stocks versus real estate is a complex topic with no one right answer. That is the most important thing for y'all to realize and recognize, that there is no right answer. Okay, the right answer lies in the type of investor or the type of return that you want. Okay, it's all dependent upon what you want to do and what works best for the individual. It's what works best for you. Do not allow me or anyone else to dictate how it is that you build your wealth. All right, I'm just here to hopefully help provide a little insight and strategy. All right. So it says when it comes to dividend stocks, we believe investors should focus on the dividend aristocrats, a group of 68 stocks in the S&P 500 index that have raised their dividends for at least 25 consecutive years. Dividend aristocrat video coming soon, I promise you. Says that you can always download an Excel spreadsheet of all 68 dividend aristocrats. They have a spreadsheet right here, and it lists every single one of them, of the aristocrats. Again, these are stocks that have not only paid out dividends for at least 25 years, but they have also increased their dividends for the last 25 years. That is important. And so they are recommending that if you are going to invest into dividend stocks and go the path of the route of building a dividend portfolio versus real estate, versus owning real estate, then they suggest you invest in stable companies like dividend aristocrats that are going to provide you with that stability long term, so that you do not have to wake up one day and open your account and see that this company stopped paying dividends, or your money has been cut. You're going to get less of a payout this month because 2 or 3 of the companies that are inside of your portfolio no longer pay dividends, right? That is the purpose here. Building up that strategy, building up those stocks and brand names that you can count on a year-to-year basis. So it says there are pros and cons to each strategy, although studies have shown over the years that one approach may indeed be better than the other. This article will discuss the various advantages and disadvantages of dividend investing versus real estate investing. So, dividend investing pros and cons. Investing in stocks has been one of the best ways to build wealth over the long term. Consider the historical performance of the S&P 500 index, and this is the historical performance, dating all the way back to Jesus Christ, 1880 here. You can see the historical performance has been mighty. Says the S&P 500 index recently closed just above $4,850, a record high. On January 1st of 2024, the S&P 500 index was at 4,770, and on January 1st of 1871, the index was at $4.44 points. Over that 150-year period, the S&P 500 returned 4.8% per year on average after inflation. It says dividend stocks, however, can be more rewarding. Take, for example, the list of dividend aristocrats, a group of companies that in the S&P 500 that have raised dividends for 25 plus years. The dividend aristocrats have slightly underperformed the broader S&P 500 index in the past decade. Still, the Dividend Aristocrats generated strong total returns of 10.67% per year in the past 10 years. So you can see the S&P 500 with that performance is right there, which is slightly higher than the S&P 500 Dividend Aristocrats performance right there. Now, it says that the beauty of investing in dividends versus real estate is that dividend stocks pay you to own them, not the other way around. Dividend stocks are an especially attractive option for retirees because dividend income can help replace lost wages after retirement, meaning you're no longer working. Hopefully, after you've retired, you are done working. You are no longer a part of the workforce. So they're basically saying, listen, in order to replace some of that income that you have lost from not working a normal 9-to-5 job anymore, dividends can fill that gap. That is the purpose here. And they can do it at a much lower cost than investing in real estate. It says there are significant tax considerations for dividend investing, as there are for real estate. Taxes can be a disadvantage for dividend investing, particularly if the investor does not make use of tax-advantaged accounts like IRAs. And I'm going to tell y'all right now, if you do not have a Roth IRA, please go and open up one and please contribute to that fund on the regular. Okay, I want y'all to invest in your Roth IRA just as much as you're investing into your dividend account. Please, please. The older you, the retired you will thank you years later down the line. I promise you. It says, according to I'm not going to read the percentages. That's all boring stuff. You all can go look that up. But I do want to get to the advantages here. The biggest advantage of investing in dividend stocks versus real estate is that dividend stocks won't provide a roof over your head. So, if you're investing in real estate, it can be a twofold. It can be a twofer. For one, it'll give you a roof over your head, a place where you can stay, right? Which everyone needs a place to stay. However, if you do not need that and you already have a place to stay, okay, then you do not have to really depend on looking to real estate in order to fill that void. So you could focus much easier on dividend stocks if you are already in a position where you do not have to worry about where am I sleeping tonight, obviously, right? The other pro to real estate investing is the appreciation of that asset that you own, or the house that you own, or the estate that you own, or the land that you own, right? Over the course of the years, what that property is supposed to do is supposed to build equity, right? And as the economy improves and gets better, that land that you own, that building that you own, that estate, that property that you own is continuing to build equity, or in other words, it's continuing to provide and gain more value as the years go on and on and on. Where I stay right now in Detroit, I'm seeing that come to fruition downtown, in the downtown area. If you owned property downtown, anywhere close to the downtown area here in Detroit, I have no question, and there's no question in my mind, I know it firsthand, that that property that you've owned is at least 3 times worth what it was just a couple years ago. All right. So again, that is a pro of owning real estate and buying real estate. But listen, I got a friend, I got a buddy, personal story time. We were having a conversation the other day, and he owns a property. Him and his wife, they own a property here that they moved from Detroit. They ended up moving to Atlanta. And right now they are subleasing out that that property that they used to stay in while they were here. They're renting it out now. And the other day he told me, like, bro, we just had 2 big expenses pop up out of nowhere. I believe one was for $3,000, which he said he was glad it wasn't way more than that because there was a plumbing issue. And if you've ever owned a home or dealt with plumbing, then we all know that plumbing can sometimes end up costing you $10,000 to $15,000 to $20,000 depending on the problem. So that $3,000 problem was a lot less than what it could have been. So he was excited about that, but still it was a $3,000 expense that he and his wife were not ready for, you know. So That is a con of investing in real estate and owning real estate that you are renting out to others. You got to be able to deal with and navigate those situations, those problems that arise. You got to basically have some money set aside just for those particular problems, right? One, you want to be a great you want to be a great landlord, and two, you want to make sure that you're keeping your tenants happy, right? So in order to do that, you got to be ready to fix any situation and problem that arises. And if you've ever owned a home, you know that can happen damn near at any time. So these are the pros and cons that you should consider if you're going back and forth versus on dividend investing versus real estate investing. Listen, I'm going to tell you, it's this article is on suredividend.com, dividend/real estate/estate. If you want to read this article, check it out. I'm not going to go through the whole thing because it'll bore you. However, they did come to a conclusion at the end of this of which one, and we're going to go over that right now before we get up out of here. So, final thoughts. There's no single solution that works for everyone, right? There have been many investors who made their fortunes in the stock market and many others who did so in real estate. The dividend aristocrats have outperformed the broader market and trounced real estate with relatively low volatility. Essentially, investing in dividend stocks is the slow and steady route to building wealth. Real estate investing involves a great deal of leverage. If you put down 20% on a home, which many homeowners do not, you've borrowed 80% of the home value. For a $500,000 home, that means investors are borrowing $400,000. Leverage can amplify returns, but as many Americans learned the hard way during the 2008 real estate crash, leverage works both ways. Dividends do not, typically, all right? Dividends, you buy it, you hold it, you own it, and the companies pay you out just for owning and holding those stocks. What more simpler way can you possibly acquire to both earn passive income and to grow your wealth? I don't see one. Listen, thank you all for watching. I just wanted to put this video out here and tell you all that if you're just getting started investing, dividend investing, and you're unsure about if it can be lucrative for you in the long term, listen, stay the course. Invest in quality companies, invest consistently, and you will be so grateful that you did later on down the line when you look into retirement. Listen, thank y'all for watching. This has been Play of the Day. I'll see you on the next video. Later.